All right, welcome out to our channel. I'm Bill Smith.
And I'm Andrew Toccaceli, excited to come to you here in our podcast form.
Absolutely, real excited. A lot of questions about gold, so we're going to unpack that. Should you buy it? What's going on with gold? What should you be thinking about? And you know, Andrew, in my 27 years of guiding people and giving advice, you know, I find that this question comes up quite frequently when things get ugly, let's say, in the news, or you know, a lot of negative headlines.
Sure.
So we have a format we want to share with people on what they should be doing and thinking about.
Yeah, I mean, gold's an ongoing cycle, right? And unfortunately, when you start hearing a lot about it, you know, it generally means the economy or the market's probably you know, either down in the dumps or there's some negative news going on. So it's an ongoing cycle. You can look back 50, 60, 70 years. The gold standards changed though a little bit.
Absolutely, yeah.
But here we are, and we're talking about it for a reason, right?
Well,
it's that ongoing question right now today is, should I buy it?
Yeah, because there have been so many people that have said, Bill, what should we do? Should we buy gold? This is a really important question on a lot of people's mind. And I think the first thing people really should do is understand, where does this come from? I mean, what is gold anyway, right? If we look back historically, you know, when we were on the gold standard, right? You know, our monetary system was all based off of that. Well, we've been off the gold standard for a long, long time. And I personally don't see us ever going back to that.
Yeah.
You know, that ship sailed a long time ago.
Yeah.
Primarily because when you think of one of the risks when it comes to that is, there's a lot of legislative risks that, you know, come into play that make gold just any other investment. But Andrew, let's start with the one thing, like, why do they say buy gold?
Yeah, I mean, you nailed it. With legislative risk starts this, right? There's something going on in the market or the economy. You know, let's talk, you know, Bill, you've seen this in your career. You said 27 years. Well, we've had a 0% interest rate policy since 2008. How has that impacted this? How has that led us to where we're at right now?
Well, it's called inflation, right? And so they say, you know, certainly inflation is a hedge against inflation. But in my career, of what I've learned about gold is, when you really unpack and look at the performance of gold, it's all about timing. Like, it's just like any other investment, and that's the bottom line. And unfortunately, Andrew, like, when you think about why a person should buy gold, they say, oh, because of inflation, world's coming to an end, you need to buy gold. And it's almost like you're scared into this. And I can't tell you how many times over the years that I've had people come in that say, oh yeah, I've got gold, how do I sell it?
Right.
You know, how do I get rid of this? And you don't want to look at something you have money in where you ask that question, how do I get rid of this?
Yeah.
You can't take a gold into a store and say, hey, my Starbucks is, you know, whatever, pretty hard not to $5 at Starbucks, but can't walk in and say, hey, will you guys take gold today?
Right. Yeah. And that's, you know, you look at where we're at right now today, and you mentioned inflation, you know, and that's where people start talking about it. And you know, we've had market cycles before in the past. We had 08, 09.
We're going to have them again in the future.
Was anybody digging up their gold in their backyard and, you know, living off of that in 08, 09, you know, during that?
I didn't see that happen and I was well into, you know, I've been 27 years.
Yeah.
Let's break down some numbers.
Yeah.
You have some pretty fascinating numbers to share with viewers here. That really starts with, like, performance, right? I mean, shouldn't people be looking at this as just any other investment?
Yeah, for sure. And you know, I mentioned 08, 09. Let's start there, right? And again, we've mentioned gold starts getting talked about when things are probably at its worst. So when were things at its worst? Last March of 2009, right? We saw the S&P down at the bottom.
Lehman Brothers fail.
You
A
got
lot of
banks
bank
failing.
failures.
You got the talking heads coming out of the woodwork saying you got to buy gold.
Insurance
exchange
company
everything over.
bailouts.
Yeah. So let's start there from what has gold done since then.
So what if somebody bought gold in that time frame? What would their return be today?
So buying gold in March of 2009 to where we're at right now today, approximately is about 115%. So we're talking a 14-year period, 115%.
Not bad.
Not bad at all, right?
Not bad.
I think most people would be happy. Now, again, you got the talking heads telling you, go out there and buy gold, which clearly they're selling something. They're wanting your hard-earned dollars to exchange into to gold.
We've
now,
seen the commercials, right? We've all seen them.
Now let's do a comparison.
Roll
now.
over your IRA to gold.
Let's do a comparison. Let's say that same individual, rather than drinking the dirty water and kind of just thinking they have to go live in a bunker for the next year and a half and buy gold, they decide to buy more of the market.
So let's start looking at some alternatives, okay? So let's suppose somebody took the same investment and they put it in the S&P 500.
Sure.
In stocks, I think that's what you're talking about.
Yeah, now you're talking, you're buying the equity market at the low at that point. So March of 2009.
Which was something like 676, if memory serves me correctly.
Ballpark.
In the S&P
right.
500, 676.
You got
Don't
it.
quote me on that, but it was in that ballpark.
You got it. And here we are floating now today, between what we've seen, 4,000 and 4,200, somewhere in that ballpark, 510%.
Is that with dividends?
That is with dividends.
That's with dividends.
510%. Compared to 115. So we said, hey, 115 is pretty good, right?
That's pretty good. It's not bad, right?
Maybe you get some diversification there and, non-correlation to the market, but we're talking a 400% difference in return there. So timing, Bill, it's about when did you buy it? When did you maybe sell it?
Yeah.
So I got a couple of other dates that I think is just interesting to look at.
Okay, so if people say, well, you could say, okay, that was the best time to buy it, or maybe it wasn't. Let's look at some different time frames to look at this.
When you hear all about the gold cycles, right? You've had, I think it was 2004 to 2011. I think 2018 to 20, we kind of saw it peak back up, and now here we are again. So the gold since September of 2011. So I mentioned, we kind of saw a cycle from 04 to 11. So gold was kind of hitting a peak up there. All the gold people were saying, I told you so, you got to be buying, you should still keep buying, right? So let's pretend you kind of, bought in at that point and you said, I don't want to miss this run. And so all of a sudden you're buying gold in September of 2011. Here we are, pushing 12 years later almost. You'd be up 6.5% total.
Total return.
Cumulative return, 6.5%, not an average return.
Again, that goes back to where did you buy it, right? I mean, so, yeah.
Let's assume you got the person who bought it and then couldn't really stomach the fact that, price is now dropping. Because we saw a drop, from 11. So you hold it for about 4 years and you decide at the end of 2015, you know what, this just isn't working out for me. You would have taken about a 47% decline. So if you would have bought it in September of 2011, you sell it at the end of 2015, you pretty much lost almost half your value at that point.
I think this is the biggest thing that I want people to understand, because when you look at this, gold, people think it's the savior. They think it's going to be the savior. The world is coming to an end. Okay, so what happens is news gets ugly. The gold bugs start coming out of the woodwork.
Yep.
Call them gold bugs. Now, I don't have a problem with gold. Don't mistake what I'm saying. What I'm saying is it's not the savior. And just like stocks, there's a time to buy it, time to sell it.
Yep.
And it should be looked at as any other asset class. So we talked about this legislative risk, some things that policy decisions that lead to concern, fear.
Sure.
whether they're political instability, tax regulations, debt ceiling,
Yeah.
which is another video we're going to do.
Yeah.
We're going to be excited about that one. Currency regulation, run the gamut. At the end of the day, what that leads to is uncertainty, which is the next risk that starts popping in. No pun intended, rearing its ugly head.
Yeah, exactly. And it's
Headline risk.
Headline risk, and we've
Yeah.
seen this dating back to the most recent, call it legislative risk. Is we had a pandemic, right? And we had $4.62 trillion spent for COVID relief. So that's led to the inflation. We had supply chain issues. We had all sorts of issues, right, happening that have kind of led to the inflation that we're seeing. So now you have headline risk. Now you got media outlets. You go to Yahoo Finance or
No
you
matter
go to
where
any
you
daily
turn,
news,
the headlines are negative.
You got a negative headline, and then
Going to reach the debt ceiling. Don't think the government's going to be able to pay its bills.
Yeah.
You hear that and like what? And if you think about it, like what do people think, right? I mean, they think, so here come the gold bugs. They have the solution.
Yep.
Put it in gold. But you got to be careful here, right? You want to be careful. You don't want to. You need to look at gold as any other investment. You need to look at gold as let's not make a knee-jerk reaction. Let's not go in and maybe put too much in. I'm not suggesting that people shouldn't buy gold at all. What I'm suggesting is it should be looked at as not the end-all, save-all when it comes to these negative headline news and risks. So, in summary, on the returns, I think those are pretty obvious. People can run their own historical analyses.
It's all about
Now,
the
here's
entry
the
and
thing.
exit points.
We look at this right now as these headline news or headline risks, are popping up every single day. Could we be in a recession? Who knows? More and more people are asking themselves, well, should I be buying gold? So there's three things. Number one, we see knee-jerk reactions.
Yep.
Number two, we see people following a herd.
Yeah,
Okay, this is psychology.
Coworkers talking to each other.
Yeah, and so don't get caught following the herd. My neighbor Bob bought gold, so I should buy gold.
Yeah.
No, not necessarily. Remember, gold is an investment just like anything else. And I know what the gold bugs are going to say. They're going to say, "Oh, but you're wrong. It's physical. You can have it." We're going to talk about that in a second. Like, suppose you did buy gold. Where do you put it? How do you protect it?
Yeah, hide it under the bed. But
Like you putting it in the bank, safe deposit box. Where are you putting it?
Yeah.
So there's places that'll
What's
charge
the cost
you.
of a safe to put it in? That can cover
mean,
it. Yeah.
Now, there's a comment you mentioned earlier, Andrew, that I thought was clever, and I love it. You said drinking the dirty water.
Yeah.
So now this is an analogy. We talked about this a little bit. Let's explain, because this is really simple for people to see, and I think there's always a direct correlation to drinking dirty water and buying gold.
Yeah.
Now, what do we mean by drinking dirty water?
Well, it's all your so-called experts that are that are coming out of the woodwork now, living off of the fear and the hysteria that the headline risk we talked about, and they're going, hey, we told you so, and we told you this was coming. Get ahead of it now and
buy gold
and start buying gold. So it's honestly, it's people trying to sell you something at the end of the day. And I see this all the time, Bill. I get we get clients or we get people talking to us, well, I read this article and I got this email subscription sent to me and I got this newsletter sent to me. What are your thoughts on this? And all it takes is one sip.
Yeah,
one sip of that
it's
dirty
so
water.
easy to think about the negative. Like the narrative is a negative narrative is so much easier for people to believe than a positive one. But you know what? I can tell you, in my 27 years, be positive. Be positive, and you will most likely come out further ahead. But I think more important is managing your behavior. And so when you talk about drinking dirty water, no matter what channel you follow, I don't care. Bloomberg, Fox, CNN, I don't care what financial channel you watch, CNBC, there's negative news.
Yeah.
Okay? The negative news is sometimes straightforward, and sometimes it's from the perspective of somebody selling something.
Yeah.
Like you said.
Yeah.
Okay? Like, so we have to look at where is this information coming from? So when you identify what is it they're selling,
Yeah.
most times, Andrew, and to your point you're making, most of the time, people that are selling they're selling a newsletter,
Subscription. They
a
want you to buy it.
subscription,
Yeah.
or they're selling gold.
Directly.
They're selling gold directly, or they may even be selling gold indirectly.
Yeah.
You know, so make sure you're looking at those things when you think about this, but just do the due diligence and understand that gold is an investment just like anything else. Gold will not save you. Gold saved nobody in 08.
Right. As I said,
Gold saved nobody in 08. I remember it like it was yesterday, 08,
Yeah.
the financial crisis. And gold saved nobody.
Yeah.
I know what we're gonna the gold bugs are gonna come out.
And
The gold bugs are gonna come out and they're gonna say things like, well, but it's portable.
You know what they're really good at the end of
It's
the day?
liquid.
It
It is liquid. Is it liquid? You can melt it down, I suppose. I don't know. I mean,
Can't eat it.
can't eat it.
Can't
Can't
drink
drink it.
Yeah.
Like, when's the last time you went into a store and you go, you know what?
Happened to bring
I
this gold bar.
actually have a solid gold necklace that I can't pay for this coffee, but would you like my gold necklace?
Right.
And I don't think you get much of a response, do you? I mean,
you know what these people have done really
you'd be
well?
washing dishes, probably.
You know, the subscriptions, the emails, the stuff that you're getting out there. What they do really well is they're marketing companies at the end of the day.
Yeah.
And, you know, hey, I've read it. I've seen the stuff that they're sending, and it goes back to the drinking the dirty water. As you start drinking, and it does start getting in your head and going, these people might be onto something.
Yeah. It's easy to believe, right? Like, you can believe this narrative that the world is coming
I
to
need to
an
go
end.
get some
And,
canned food, and I need to
buy
dig
the
a bunker in the
generators.
back
I mean,
and-
Andrew, I remember 2000.
Yeah.
In 1999, the world was coming to an end.
Yeah.
Very, very vividly, clearly, I remember New Year's Eve, 1999. I did not buy a generator. I had no canned food. We had a phenomenal New Year's party.
Yeah.
And the funny thing is, we were all anxious to see that the world, the computers, everything, because of Y2K,
Right.
the world was coming to an end. And the world didn't come to an end.
Well,
And all those people who bought gold because they thought maybe then world was coming to an end, they bought the generators, they bought all these things. You know, we begin to realize in finance and investing, there's two things that drive people more than anything.
fear and greed. Fear and
I
greed.
knew it. I knew you'd get that.
Yeah, you
Yeah.
got it. And that's the
And
people who know how to
thing
market.
that's really important is that it's easier to buy into fear. If I tell you, if you read the headline news and everything is negative, but I'm telling you now's the time to buy stocks, that's hard to do.
Yeah.
But I can tell you that if you go back historically, every time the news is its worst, if you just buy stocks, good companies, then you're going to do very well. But what happens is we see people, they get into these situations where they're fearful.
Yeah.
I get it.
Yeah.
They're too connected to their money. Maybe they don't have a coach. Maybe they don't have an advisor. That's fine.
Yeah.
But when you are emotionally connected to your money, you can make some big mistakes.
Absolutely.
Even the smartest people
Yeah.
can make some big time
Yeah.
mistakes.
And it's all fear and greed, and that's what leads, and gold's probably, more guilty of this than even the equity market is, that you got to be right twice. If you're playing that timing game of trying to go, well, gosh, the world's coming to an end right now, I need to go buy gold. Maybe you hit it. Maybe you get it right. Maybe the market, corrects itself a little bit, and gold, works the opposite, and you get some pop there.
Yeah.
You still have to be right again, right? Of
That's
deciding,
right. Yeah.
when am I going to trade
You can't
this
time
in?
it. There's no way to time the market.
It goes back to my numbers I said.
Yeah.
You bought in 2011 or whatever, 2009. There was points that you could have sold and probably made some really good money on it. Most people don't do that. They hang on
a
to
broken
it.
watch is right twice.
You got it.
Right?
And,
right. Two times a day.
and-
right?
and-
And so even those negative, the naysayers, the doomsdayers, whatever, we are not glass half empty people. The glass is half full. We're thinking optimistically. We want to be able to take advantage of opportunities. Now, I will tell you that if gold is something you're interested in, I think there's some important things you should understand. Like why do you own it?
Yeah.
Like, how does it fit into your plan?
Yeah. We talk planning all the time, and we don't need to go there, but at the end of the day, it is. If you want to buy it, how are you buying it? Number one.
And why are you buying?
And
what's the end game? Most people, when you think about this, you buy an investment. Why are you buying an investment?
Yeah.
Because you want it to grow?
Yeah.
Is that because you're going to maybe spend it someday, or you want to be able to use that growth? Well, it requires you to sell it at some point. And so the problem is when you have physical gold, because maybe it's out of sight, out of mind, and maybe it is a good hedge. I'm not denying that, okay? Go back to your numbers, Andrew. You mentioned in the beginning, if you bought gold in 2000 and well, recap these real quick, and then let's talk about
gold.
What does somebody need to do?
So gold since 2009, March of 2009, when the market was at its worst, 115% compared to the rebound of the S&P since then is 510%. Gold since 2011, when it was kind of had peaked at one point, only up 6.5% since then. So kind of same price as where it was.
And
12
gold
years
right
ago.
now is at its
all-time pretty much at its
all-time high. So the rule of thumb is always, for as long as I've been in this business, for as long as my family has, for as long as we are in a capitalistic economy.
Yep.
The rule of thumb is you buy where?
Buy low.
And you sell
high.
And so don't let fear get the best of you. Do your homework. Now, we've diversified to commodities.
Sure.
Okay. Now, I'm not saying we haven't owned gold. We have.
Yeah.
We've owned gold.
But it's for an investment.
But as an investment, and it's part of a strategy. And we want to try and prevent ourselves from buying gold at the wrong time, because just like any other investment, you need a return on your money.
Yeah.
Okay.
So how do you do that?
How do you do that?
I mean, we talked about the physical bars, and
that's,
here's all the things that can go wrong.
You get coins, you get bars.
Where are you storing it? Is it portable? Is it liquid? When do you sell it? Because what I've seen is people who own it physically, it ends up just being a collectible.
Yeah.
It's basically it's.
Oh, I got these gold bars. Right. What do we do with these?
Exactly.
You almost forget they have value.
Right. Now, if you're working with a planner and you're building out your risk profile, and you've identified XYZ dollars as long-term growth type of money, does diversifying into some commodities, including gold, make sense potentially? Sure.
Absolutely.
We just proved that it's not a safe haven.
It's not a safe haven. It's
gonna
never
be just
bailed
as
anybody out.
And whatnot, but could it make sense? Sure. One way that we've seen it and we've done it is, there's ETFs out there that are fully liquid, exchange traded funds that trade like stocks. You can buy it and sell it in the same day. Mutual funds, there's full on commodity funds where maybe you want to diversify outside of just gold. We've focused on gold, but silver and palladium and you run the gamut.
Yeah, there's some other commodities that might be more widely used. Gold is one of those things that's almost kind of in that collectible category. Hate to say it, but
so moral of the story, I'd say, Bill, is like understand why you would own it.
Yeah,
don't fall victim to the the gold diggers,
the gold bugs, the doomsdayers
that want you to literally buy it, bury it in your backyard, and someday when we have an apocalypse,
that hasn't happened yet.
Right.
I've been through multiple where the apocalypse was at the doorstep, and it never occurred.
You turn your gold, and you're going to be living in a mansion, and everyone else is going to be who knows what's happening. So don't fall victim to that.
Yeah.
Understand what's the purpose behind it. Is it part of your asset allocation? Can you sell it easily? All the above, everything we've talked about here.
All right, we're going to be using this podcast to educate on current events and share information about those current events to give you financial peace of mind.
Drop your comments below on some upcoming topics you want to learn more about. Hit subscribe, and to keep learning, check out the next video.
See you next time.